Welcome to Friday Market Insights. Today is June 11th, and my name is Jill Bester. I am a new partner and associate portfolio manager with Genis, and today I am joined by Wachell, our CEO and Chief Investment Officer. Good afternoon, Wayne.
Good to be here.
Great. Well, why don't we jump right into it? Why don't you share with our viewers what happened in the markets this week?
Well, rather an interesting week. It was a week when the CPI numbers came out, and they were the highest in years since I think back 2008, and yet bond yields dropped. So with the bond yields dropping, that carried the growth stocks, and tech stocks all rallied, and the cyclicals and value stocks came off. Financials, industrials, and metals all came off. On the commodity side, oil went up about 3% this week. And on the flip side, lumber still kept coming off, and copper kind of just trickled down a bit there. But interesting week, given the strong numbers, but very interesting week.
Right. There's a lot of talk about CPI being transitory. What are your thoughts?
Well, I think that question is yet to be answered yet. We still have to wait for some time. Number one, we're coming off a low base from last year when things really went into a dive. And so we have to wait and see what happens as we come out of the hole here into this fall and see what the numbers are then. I know the Fed's talking down CPI and getting the street media to do the same thing. I'm skeptical of that. As we all know from history, inflation is a monetary phenomenon. They're printing money like there's no tomorrow. And so we're gonna have to wait and see what happens in the next year. There are some shortages that are coming in supply chains and labor, those kinds of things. Hopefully those will be filled, and as we go into as the economy recovers and people get back to work. But there are some concerns. We're gonna have to wait, I think, until later this year or early 2022 to really see what's going on in terms of inflation.
Right. On that note, the meme stocks are running again. I was just looking. AMC is up another 10% today. It's a lot of news, obviously, on the street in regards to what's happening here. How long do you think this trend can last with the Reddit group?
I think it can go on for a long time. Let me tell you why. Number one, there was massive technology change in the whole trading area, which allowed the small retail players to come in and trade. Okay, and that really they could trade, and then they got together with the internet, with social media and things like Reddit, and start wolf packing different trades. And with that, they've moved the market. They've chased some of the shorters out of the market as well. So they're afraid to go in. The put call ratio is way down right now. So the shorts have been hurt. And so it can go on for a while. And I don't think these people are making a lot of money. These things will, I think at the end of the day, stocks come back to reality. They trade based on earnings. But it's like you asking, when will people stop going to Las Vegas? Most of them lose money, but they have a good time. And I think the folks at Reddit and that Reddit crowd, they're having a good time. They're moving markets. I'm not sure how much money they're making, but they're talking to their buddies over beer, probably what they're going to go along next. So I think it's like a Vegas sort of phenomenon here where people are having fun, but I'm not sure how much money they're making. So I don't think it's going to go away.
Yeah, it's amazing. One of my husband's employees, young guy, was raving about a month ago about his AMC purchase, and now he's struck it rich on his 7 shares. So,
but if they act together collectively, and it can have an impact. A lot of small investors can actually move markets, and they've scared some of the shorts.
Yeah. You talked about the labor shortage. Obviously, there were some other U.S. job numbers. There's actually hit an all-time high of 9.2 million in available jobs. Do you think that's going to have an impact in the economy growth?
Well, there's still a lot of pandemic money floating around out there, and I think people have gone fishing for the summer, maybe. But I think we'll see this fall the numbers will come back as people get off the dole, as they say, and are back to work. Have to get back and get a job, and there's a lot of openings, definitely, and salaries have gone up as well here. But I think this fall we'll get a better shot of what's going on with that inflation number. But the economy is going to improve. We definitely believe the economy is going to be strong, and there's going to be more demand for jobs. But and I think there's maybe some vaccine or pandemic hesitancy here from the labor market as well. So it's a false story, I would say.
Right. We were talking about that this morning in our market update in regards to, we've kind of hit kind of a plateau in Canada of those people who have had their first vaccine, around 73%, but we're not really seeing that number rise.
Yeah, I think, the numbers are probably strong enough for herd immunity. I would say here, there was probably 25% natural herd immunity already, I'd say, going in. So we're probably close at 70%, I would say, and this is going to help. I know the US is lower than Canada, but their natural herd immunity is probably close to 40%. So that's going to help from that perspective. So I would say the herd immunity is going to be, combination of vaccine and natural herd immunity is going to be high enough to tamp this thing down. And I think the market's saying that as well.
Yeah, you definitely see it in the consumer. People are definitely opening up their wallets at this point, so that's a good sign. We had our macro asset mix meeting just last week, and the models continue to favor defensive stocks. Can you explain why and what that means for our portfolio positioning?
Well, as I just said, we anticipate stronger growth. We anticipate higher interest rates. That's usually a good formula for value stocks, and growth stocks don't do well in that kind of environment. And so our defensive stocks are very value driven. They have high dividends, which is really tied to value and earnings. And that's where we're putting our money there. We think it's a great place to be. Also, the market's done quite well here. We're through 4,200. We probably will get 4,500 maybe by end of the year. There's not big upside here as well. So you can go to a place where you can get a good dividend yield of about 3.5% in our defensive dividend strategy, and keep riding that value play, which we think is going to continue to the end of the year.
Right. Great. Well, thanks so much, Wayne. I know Rafa is your guy, and it's the French.
Go Rafa.
Go Rafa. We always seem to meet during a large tennis event like this. Yeah. So at this point, we'll call it a day. I'd like to thank our clients and our potential clients. If you have any questions, please don't fear to reach out to one of our portfolio managers. You can find our contact information on the site. Thanks so much and have a terrific day.
Thank you.